Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 25th, 2025, and we're diving into Scotiabank's first quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Scotiabank's latest earnings report provides a comprehensive look at their financial performance and strategic initiatives, and I'm excited to break it down with you.
Revenue and profitability overview. Let's start with the top line. Scotiabank reported a total revenue of $9.37 billion for the first quarter of 2025. John, how does this compare to their performance last year?
Scotiabank's revenue has increased from $8.43 billion in the same quarter last year, showing a solid growth trajectory. However, the reported net income of $993 million is significantly impacted by an impairment loss related to the sale of their operations in Colombia, Costa Rica, and Panama. On an adjusted basis, net income stands at $2.362 billion, with an adjusted EPS of 1.76, which is a positive indicator of their core business strength.
Segment performance and strategic initiatives. Scotiabank operates across several segments. Can you give us a breakdown of their performance in these areas?
Absolutely. Canadian banking reported adjusted earnings of $914 million, a slight decrease due to higher credit loss provisions. International banking earned $692 million, reflecting a more normalized performance compared to last year's record results. Global Wealth Management saw a 22% increase in earnings to $416 million, driven by higher mutual fund fees and brokerage revenues. Lastly, Global Banking and Markets had a strong quarter, with earnings of $517 million, up 33% year over year, thanks to robust capital markets activity.
Credit risk and capital ratios. Credit risk is always a concern for banks. How did Scotiabank manage this in the first quarter?
The provision for credit losses increased to $1.162 billion, up from $962 million last year, reflecting a cautious approach amid economic uncertainties. Their Common Equity Tier 1 (CE1) capital ratio stands at a healthy 12.9%, indicating strong capital adequacy. The total allowance for credit losses is $7.08 billion, which provides a solid buffer against potential loan defaults.
CEO's perspective and future outlook. What insights did the CEO, Scott Thomson, share about Scotiabank's future direction?
Scott Thomson emphasized the value of Scotiabank's diversified franchise and their focus on deepening client relationships. He highlighted strategic moves to enhance profitability in North American markets and simplify their international portfolio. Despite economic uncertainties, the bank remains committed to supporting clients and achieving medium-term financial objectives.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $1.17 for Scotiabank. How did the actual results compare?
Scotiabank exceeded expectations with an adjusted EPS of $1.76, beating the forecast by 59 cents. This outperformance is a testament to their effective cost management and revenue growth strategies, despite the challenging economic environment.
Key takeaways. In summary, Scotiabank has delivered a strong performance in the first quarter of 2025, with significant growth in adjusted earnings and a robust capital position. Thank you for joining us, John.
Thank you. It's been a pleasure discussing Scotiabank's results. Their strategic focus and financial resilience position them well for future growth.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Scotiabank's performance in the comments below.